Good evening, guys. Raghu here. Hope you had a good trading day. Before we move, I just want to quickly bring you to my yesterday's YouTube video. There was a video which I released later for 2 minutes. So this is exactly what I marked. So I just wanted to inform you if you have missed, because I saw only 69 views we had. Some of you who follow me just wanted to show you what exactly the significance of this before we go further. So I'll quickly take some time. So yesterday I said if you have ascending CPR continuously, okay, if you're having, see here, we're having a continuous descending CPR. Descending means downward. And one fine day, we get one ascending CPR, means overlapping or a higher CPR. So this means shift in bias sentiment or investor sentiment. So the next day will be most probably a sideway or it can go up. You should have a bias towards upside because investor sentiment has changed. It was just 2 minutes, but I was disappointed that most of you did not see. If you have not seen it and traded today on short side, you would have lost money today. And also today was a no trading day. Likewise, see here, descending CPR, one day ascending, shift in investor sentiment. Look what happens next day. Choppy sideways. So similarly, what happened today? I had shown you today, we had ascending CPR and I told you today will be choppy sideways or market can pull further upside. Anyway, now quickly I will provide you the levels. People who just want levels can watch these levels and key highlights and draw. People who wants to learn, they can stay with me for a few more minutes. Now understand market is in downtrend. This is the trend line. Today barely, this is a 30 minutes trend line. Okay, if you go to hourly, let's go to hourly. So it's just the last 30 minutes has barely tried to go above this. Now I had told you that this is a gap has been filled. Above gap we have this doji. Again, this is the last 30 minutes. Usually I keep the entire doji as a buying area because doji is an indecision, right? Buyers and sellers are indecision, in undecided, and next day sellers made a decision with a gap down and market went down. So if doji is taken out, okay, for a safe assessment, but why I'm keeping 17,000 is 17,000, most of the people, it's an open interest light and tomorrow is expiring. So if fairly, I would still from a proper technical perspective, 17,020 is the level. Above 17,020 market can go to 17,100 and then 17,173. Remember this, 17,020 if market sustains above this doji, because that decision point has been removed. That is the logic behind that. If market goes down today, there was a lot of sideway and there was some buying area at the bottom. So if market goes down, it needs to break 16,820 for next level of 16,742 and subsequently go towards 16,700 and try to fill the gap. Understood? These are the key levels, and if you're happy with this level, you can drop. Now I will give you the tomorrow's CPR analysis. So we still have an ascending CPR showing that investors are trying to push the price up. Obviously the last 45 minutes market went up. So our R1 is 17,010 and S1 is 16,859. With the earlier levels given, I have always told you, when do we expect a breakout? Above R1 or below S1? Yes, guys, this is as simple as it is. Now, what happened today? Okay, before we go for Camarilla analysis, where is our R1? R1 is here. Market was hovering around R1 continuously. Tried to break here, gave a false breakout, came down, but it did not go down. It reversed immediately and broke R1. If you were smart enough and if you have seen my 2-hour long pivot price action video and price action candles, you would understand this is a reversal pin bar, very strong pin bar, and you could have simply traded 5 EMA from here. Yes, 5 EMA because it was above 5 EMA, the blue one that is on 5 minutes. You could have just gone here. Probably you could have taken around more than 50 points if you're brainy enough. Yes, it hit your stop loss here, maybe around 20 points, but still you could have recovered that and entered into profit. Okay. Now this was a tight range. Now I'll quickly move to Camarilla pivots. Even R1 is a resistance, but Camarilla, you have a clear definition. What is R4? Today R1 in standard pivot as well as Camarilla pivot was at the same level, forming a hot zone. So you had Camarilla and R1 overlapping at the same level, and breakout of that was another what you call high probability trade to go long side, and I totally missed it because I was having I was attending a function at my cousin's place. Anyway, R4 is a selling area. What happens? Market opens, tries to break, no selling area, boom, comes to R3. R3 is a buying area, long wick is formed, and market once again attempts to break R4. You get reversal pin bars. Now this reversal pin bar was one trading attempt if you had patience. You had two back-to-back reversal pin bar, so you knew this is a stop loss and you could have gone targeting R3. Probably you could have made around 30 points here, 25 to 30 points. Now here market went sideways. After sideways, since it is a range, you can anticipate market will attempt R4, and if you had patience, remember it's game of patience. Market was volatile, every trade is a risk, every trade we can lose money. So if you have patience and if you had followed 5 EMA, keeping stop loss below 15 EMA, probably you could have made around 10-15 points. But I wouldn't have traded here because these are overlapping candles. No matter EMA, we want pivots and price action. This was a highly overlapping area. There was no clear trend here. Just telling you, some people try to trade. Even if you want to take the risk with EMA. Now this one gave a breakout. Somebody tried to enter, but this was the high of the day. So this entire zone was selling zone, isn't it? This entire zone was selling area. So market, you should have waited either to break the high of the day, or if you had entered keeping stop loss below R4, the moment market reverse, you could have exited. What happens next? It comes here. I have informed you. Since we have a overlapping areas, overlapping CPR, bias was on upside. So you have a sharp reversal pin bar. You should have gone, taken the risk, and you could have scalped around 15 points. All right. And also the overlapping area is not only on CPR. Please understand how to read pivots. No need to read any market news. No need to read any analysis. You can learn by watching me. This is the value area, sorry, R3 and S3. Today's. Yesterday's R3 and S3 is big area. Okay. I'll change it into green. So when you see this area, this is investors area, right? Sell area, buy area, sell area, buy area. Now yesterday's buy area has gone up to 16,700. So we call it as overlapping value areas. Similar to CPR, we have a uptrend, moderately uptrend, and market is acting as a buying near R3. So the bias is upside. That is how you need to read. Now, for tomorrow's Camarilla pivots, we don't have any script. Even in trading view, I was not able to figure out any script. However, me and my friend is working on a script. Once we have the script, we can get the tomorrow's Camarilla levels today itself, and we can identify whether it's going to be a trendy day or a range bound day. According to me, tomorrow we have a wedge pattern. I have already informed you. This is the wedge pattern. If I have not informed you, the characteristics of wedge pattern is breaking down. Okay, this is a wedge pattern. You can see we have several wedge patterns here. So just to show you, this is very important for you to identify what is a wedge pattern. Wedge Wedge means moving up and down. We will have a very big base at the beginning, and as and when it starts moving up, it starts contracting. This is across all time frames. So I'm using 15 minutes time frame. See here, initially it looks like a channel, but it has started contracting and eventually it will break down, similar to here and similar to here. So why I'm telling this is a breakdown? So this is the characteristics identified by a lot of people, trading masters. See, market is in strong downtrend. Do you see? This is in a downtrend and this is just a pullback. So for market to move up, it has to break the downtrend trend line and also sustain above 17,020, which I have informed you. But however, since we are having a wedge pattern, and the wedge pattern, if you see any RSI divergence, it will work even better. So the divergence is the way to identify if market is going to go down. Okay, this is slightly downside. If there is a gap down and if a trend line breaks, you can confidently go short with the pivot levels below S1. It's a trend. See, market is gone upside, but here it's slightly down. You can see it. If I move it very close, see, it is not up, slightly down. Here it is upside. So we do have kind of negative divergence on RSI, but tomorrow's opening will confirm. Remember guys, I always tell you to be neutral. We are intraday traders. As an intraday trader, we need to pick intraday trend. We are in a long-term downtrend, but however, how market work today? If you are an intraday trader, you could have made around 50 points even today. Anyway, so this is a wedge. Market is still in downtrend, but as an intraday trader, if price sustains above R1, it's a breakout. If it sustains below S1, it's a breakout. Hope this helps. Thanks a lot. Please do subscribe, encourage, like, and please do watch the 2 minutes video yesterday's to understand better. But anyway, I have covered all the levels in this video. So my next video will be on stochastic RSI, which will help you how to spot the trade. Thank you. Love you all. Have a good day.